Hello, everybody. Today we have the Joe Duffy. FFR Trading presents Joe Duffy Target Zone Options and the Neuroscience of Trading. I'm just going to do a quick check. Make sure that everybody can hear me. If you can hear me, go ahead in the question box, type in yes or a Y, and that'll let me know that you can hear me. Loud and clear. Perfect. All right. Yes, yes, yes. Great. Okay, perfect. Okay. And can everybody see Joe and I today? You should be able to see us as well. If you can see us, just go ahead and type yes as well. Or yeah, perfect. All right, everybody can see us. All right, everybody. My name is Michael McGinnis. I am the president and founder of FFR Trading. Thank you very much for joining us today. I'm going to be your host. Typically, my VP of marketing, which is John Madison, he's been with me for, I don't know, going on about 5 years. He will host these events, but today I'm stepping in and giving him a day off. So it's going to be Joe and I. So I'm going to go ahead and get started. We got a great event lined up for the next hour. So everybody grab a glass of water, grab your pen and paper. We are going to be recording this event. We're going to be sending everybody an email afterwards with the recording, so just be patient. We'll get that out to you in case you miss it, or you have to log off the webinar early. Hopefully you don't, because at the end of the webinar, we got some great questions that Joe's going to be going over with you. He's got some specific trades he's going to be giving you guys as well, who's attending the webinar, and that you can look forward to for this year. So we got great lineup ahead with the webinar. So, all right, so here we go. Let's go ahead and get started. First off, what I want to do is go over and show you the risk disclosure, and I'm sure all of you understand risk if you are trading in the markets. Please don't trade with money that you cannot afford to lose, and there's always risk in trading in the markets. So that is here. I'm just going to let you look at the risk disclosure real quick and make sure you got a good handle on that before we move forward. All right, so hopefully everybody read that, and I'm sure you've seen this many, many times, okay? All right, I'm going to go ahead and proceed forward. All right, well, Joe, I got you on today. Thank you so much for joining me and all of us and taking some time out of your busy trading day. How are you doing? How's everything going?
Good, thanks, Michael. Good to be here. I am sort of watching something out of the corner of my eye, so if I have to flick back and forth, that's why.
I know you got one eye on the market and one eye on the webinar, so that's good. That's a professional trader of over 30 years right there. Oh. So, well, why don't we do this? I mean, Joe and I, you and I have been working together for going on 5 years as well. And what I'd like to do, if you could please, just give the audience, I mean, I know everything about you, but if you could go ahead and give the audience a little background about yourself, of those, you know, there's probably a lot of people on the webinar that don't really know you. So I'll let you go right ahead.
Okay. Well, I've been in the business about 30 years, I guess. Got started in the United States Trading Championship, which back in the 90s was a big deal, and got a lot of coverage in Barron's and stuff like that. That's where Paul Tudor Jones got his start, a lot of other big names. Managed to negotiate that into a position for one of the largest international banks, where I was on the prop desk trading, you know, for the bank's account and risk. Also wrote a technical market letter for the bank that was ranked #1 by the Greenwich Survey, which is a survey of institutional clients in North America, and was a manager of an exempt hedge fund, and trading on and off on my own for 20 odd years, I guess, or 20 years since I left the corporate world. So yeah. And so that's my story.
That's your story, and you're sticking to it. So, well, I mean, it's fantastic too, Joe. I mean, it's those that know you, you're very interactive and easy to talk to. I mean, it's, we have a lot of clients that's been with us for a long time, for years, and those that have spoken to you have come back and told us, I mean, he's a really cool guy, and really easygoing and laid back. And so I appreciate that, and I think the clients appreciate how attentive you are to their questions that they have with regards to trading and just in general, just having conversation. So, yeah.
Right. Yeah, that's great. Thanks, Michael.
Yeah. So, but impressive track record. I mean, it's, I follow your trades on a day-to-day basis, and, you've been kicking butt lately, and, you're seeing a lot of success, and a lot of clients have come back and thanked us. And, so I appreciate you, and I appreciate working with you. So,
Oh, that's great. And I appreciate working with you guys. Yeah.
yeah. So let's move forward and keep this ball moving forward. So that's Joe Duffy, and let's talk about the webinar topic. So we got a great lineup, Joe, right? I would say we're going to be going into a deep dive into your target zone options premium level advisory system. Now, I know you have a couple of systems that are offered. You got an entry level system called Quantum, which is basically just a signal alert service that trades puts and calls primarily. And then with
it trades off a program with no interaction by me. That's what it does. Yeah.
And then we have Target Zone, which is fully interactive by you, a lot of education, and you're doing a little bit more than just puts and calls to be able to protect yourself and catch opportunity in the market. We're also going to be going into the neuroscience of trading, which is something that you are an advocate of, and it's really important to trading, and you're going to help everybody today understand why it is so important, right? So I'm pretty excited to hear you on that one. We're going to go over your proprietary scoop indicator, which you have designed and developed over many years ago. That's only offered by you. So I'm really excited to dive into that. You're going to be giving a stock trading opportunity to look for this year. Now, we highlighted this earlier this year because we had you, Keith Harwood, Chuck Hughes, Wendy Kirkland on our global webinar back in January. You highlighted a trade, so we're going to be taking a look at that this year as well. And then at the end, we got a nice Q&A session, and the audience can actually dive into some deep questions and talk to you about what's on their mind and hear what you got to say there. All right, so I'm really excited. So we got a great lineup, everybody, to look forward to. So introduction, and for those of you that have signed up with the webinar that are not a client of ours or somebody that understands who FFR is that we've spoken to already, but I founded the company back in 2006. We've been in business for a little while, and what we do is we partner with individuals like Joe that are needing help in finding individuals like you. And so we're that middleman and that connection from the retail investor to the professional trader on that side of it. Joe's, he's trading every day. He's managing his clientele. He doesn't have a lot of time to talk to individuals who are looking for help in the market. And that's where FFR comes into play. The way I like to describe our company, FFR Trading, is that we're a boutique research and due diligence firm. Okay, so we evaluate systems like Joe's and traders like Joe to be able to offer to the retail public. Every single trader that we work with comes to us by a reputable third-party source. I just didn't happen to run across Joe at a restaurant or on the golf course. Joe came to us through a very reputable source that's been in this business for over 40 years and introduced to me by my company. Joe was looking for help in supporting his advisory services, and my company fills that gap. So FFR, if some of you are wondering what FFR stands for, it's financial freedom reached, okay? And that's our goal. Our goal is every single client's retention and their success. If we can show you success, we can retain your business. And what's nice is that Joe and I and all the traders that we work with have those same two goals in mind, right? If Joe takes a loss, which he does take a loss from time to time, right, Joe? You hit a loss sometimes, right? It happens.
Yeah, had our first one in a long time, but yeah.
And, and it's devastating. It's devastating for you because you lose a lot of money, but it's also devastating. There's been many times where you've come back and said, Michael, I took a loss today. I feel so bad for the clients because I know they took a loss too in the market, and it's devastating. So, but it happens, right? And so, so it's really nice to work with individuals like Joe because they have those same goals in mind for every single client. Okay. We do represent other traders outside of Joe, but Joe's one of my #1 traders that we work with. I've been working with for a long time. Individuals who have over 15 years experience. In Joe's situation, he's got over 30. And what we look for is traders that can or have an average of over 100%. Those are very good years, and we do have those. And then we also have bad years, and sometimes we may see a 20% return. Or a little bit more than that. So we look for traders that are averaging over 100% annual returns, that have systems that can apply to various different market climates. All right. Joe's got success under his belt. He's been doing extremely well. We also have a 8-step certification process that we go through. So typically it starts out with an introduction. I have a very in-depth conversation with Joe, and we get to know one another, and I feel like, and Joe feels like, if there's synergy between the two of us, if we feel it's a good connection and we can work together, then we start going through some process. He sends me his rules, indicators, details of the system, the methodology, and then from there we see if it's going to be a good fit, and then we start to market and launch that with Joe. All right, so that's typically our process. It's pretty in-depth. It goes beyond just Google. A lot of retail investors like yourself, that everybody's on the webinar today, your main source for doing research is Google. And Google can be a great resource for everybody. It can also be very time consuming. It can also be very confusing because you'll be researching and looking at options and looking for something that may fit you, which, a lot of retail investors, like, everybody is they don't really know what they're looking for in some cases, but they end up down all these different rabbit holes. And then you end up wondering, is what I'm reading real? Is it really successful? And you have to do a lot of fact checking on the fact checkers that you run across on the internet. So it can be tough. And so that's where our company comes into play, because we're going to be doing all that fact checking, heavy lifting, and hard work for you to find great traders like Joe who are real and who are successful. All right. Now, Joe, just to kind of tag on to that and what I just went over with everybody, why did you, everybody heard why we love working with you, because you're so fantastic, you're successful, and you're great with our clients, and you know what you're doing, but why pick FFR? Like, why choose my company to partner with when you got your pick of the litter out there? Everybody wants a piece of Joe, but why work with FFR Trading?
Well, I think you know the answer to that, Michael. You're the only one that invites me to your birthday party. So,
Definitely true.
It's transparency, I guess. I know that you're not going to be misrepresented, or you're not going to overpromise and underdeliver. It's just it's going to go smooth, and I don't need headaches. So yeah, it's just well done, and it's all above board. So yeah, that's I'm happy to do it with you guys exclusively. Yeah.
Yeah, well, good. Well, thank you. I appreciate that. I mean, we do work very hard, and we want to make sure that the clients that end up calling us, and we want to make sure that the program is going to be a good fit for them. So there is a 2-step process to our how we go about offering our programs. And the first step is just finding out, some fact checking about the individual and what they're really looking for, and see if we have something that fits what they're looking for. So so great. So thanks. I appreciate that. Well, let's dive into your system here for target zone options and give people an overview of what target zone options is all about. And we're going to first start out with the performance, because your performance has been fantastic. You have, you know, I know in the past you did a lot of spreads, and now you've shifted more towards puts and calls and directional trading. And then now you're doing a spread once in a while when the market permits it, to be able to protect your current positions, which is fantastic.
I'd say it's
Right?
half and half now. Yeah.
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 So, which is great. And so what we're looking at here, so everybody has an understanding, is that this is a an overview based on an account size of 10,000 and approximately using about $1,200 per trade allocation, non-compounded. This whole entire record is based off non-compounded results, but buying as many option contracts as Joe can based on a $1,200 account. So that could be 1 or 2 options, or it could be 4 or 5 options, depending on the pricing, right, Joe? And then, as we know, past performance is not necessarily indicative of future results. Okay, so, but this shows your record of going back to 2019 all the way up to just a couple of weeks ago. And on this 10,000, this is showing a net profit of about $112,426. You did have some loss here and profit here. You'll see you got about 33 grand in loss, 145 grand in gross profit, and then we have a return on capital of about 1,100%. Now, what I want to show over here, and we're going to go all the way to this column here, you got a win-loss ratio, which is fantastic, okay? But I really want to focus on this here, because Joe, as we know, you know, everybody sees losses. Even when one of the best stock pickers, which is Warren Buffett, he sees losses from time to time. But you are going to see losses 25% of the time. It's just navigating those losses and making sure that you keep your losers to a minimum, which you have an average loss, if you're looking down here in the middle column, of about $356, which is your average loss. And your largest loss was about 900. So,
Yeah. And if anything, the losses are getting smaller. Yeah.
yeah. And I think in the track record that we have, in the last, what was it, 20 trades or something, you only have what, 3, maybe 4 losses?
I think in the last 40 trades there are like 5 losses.
5 losses. It's just been,
Yeah.
it's been incredible. So you do have that profit factor, if people want to know what a profit factor is. So every dollar that you move backwards, you move forward $4.36. So on the profit factor. So you're in on average about 7 days. So you don't hold trades that long, right, Joe? You're in for a very short period of time. Usually you're buying options, what? Are you buying options 30 days out, correct?
No, that would be the minimum usually. There's some exceptions if I'm going to do a SPY spread or something, but normally I don't like to get into the too short of options where it's too stressful. So I'll go 2, 3, or 4 months out usually. Yeah.
Okay. All right. And then we are seeing some great results here. If you look here on your average, based on a $10,000 account, you're averaging about $1,800, about 18%. And then we have your average annual returns here. But really, it's like, I really want to highlight the losses, because losses are going to happen, but it's just keeping those to a minimum. And having 5 in the last 40 trades is incredible. So congratulations. Now,
I was improving on that, and I'm very happy to be improving. In fact, I'll just sidelight here if we have time. I just took a trade off today. I put it on last week for $4.70, and I just took it off today for $4.75. And I think there was a time when I might have thought, oh, geez, you know, a client's going to think, what's he doing? He just got in, now he's getting out. But you know what? It wasn't doing what I thought it should do. So I just got out of it. Yeah. So,
I mean, that's smart. I mean, you know, it's anytime you can capture a profit, I mean, that's not a bad day, right? So,
well, no,
yeah,
it wasn't a profit.
small.
It was a 5-cent profit. So it basically, in for $4.70, out for $4.75 on the
Yeah.
options. So by the time you're done paying transaction costs, you're nowhere. But yeah, I think there was a time when I might have said, you know what, just let it ride. I don't want the clients to think I'm in and out like for no reason, which is foolish because I knew I should have got out. So
Yeah.
that's what I do. I just
Well,
get
I mean,
out.
that's
Yeah.
your expertise. I mean, it's, on that side of it. So, and that's why a lot of clients love trading with you. And then your whole thing of that you've been preaching for a long time and teaching is patience pays. So sometimes you sit on the
Patience pays.
sideline.
Yep.
Yeah,
Yep.
right.
Yep.
So,
Yep.
so let's talk about your guidelines here, just to give everybody an idea of how your system trades, so they have a very clear understanding. If they are interested in getting started with you, it's basically it's mathematically defined methodology, but primarily using your proprietary scoop indicator, right? And you're focused
That's
on.
correct. That's major. But there's
Yeah.
other stuff. Yeah. But yeah.
And every day, I mean, you're navigating, you're looking at opportunity in the market on some of the most liquid stocks and ETFs. So you're doing all the heavy lifting, you're doing all the hard work, you're looking for opportunity in the marketplace every day that you can take advantage of. And also you're buying puts and calls, but trading spreads when the market absolutely requires more trading protection. So you're doing about 50-50 is what you're saying.
Yeah, probably somewhere in there. I bought some. I bought a straight. Actually, I bought a straight put today in Nike when it was up. So it was up about 40 cents. Now it's up about 10 cents. So it's starting to move my way. Um, Not really sure it's a put market for very long, but it's also a market of stocks, and I don't think Nike's going to go up from here. So
Okay.
yeah, but I
And
do have some spreads on at the same time. I've
is
got a
there,
PayPal spread on, which is bullish. So
oh,
bullish PayPal. Yeah.
okay. All right. Well,
Yeah.
there you
But that was from a couple dollars lower. So if anyone just don't run out and do it now.
go. Yeah. uh, and anything here, I mean, you have a lot of nice risk protection rules in place. Do you want to talk about your risk reward or your protection rules that you have in place?
Um, well, generally, if things get really horrible, I'd like to take it off before you lose 50% of the option value. But like I said, I've been really much more diligent about just getting out with small losses if it doesn't feel right. Like I did today in the IBM. I was going to sit through earnings with it. That was my intention when I put it on, but I just didn't like the way it was acting. And, so I got out today at a 5 cent profit. So really, like I said, it was basically a scratch trade. And so I would rather, even if I got out at a 20 cent loss, I would have still gotten out, just because it didn't feel right to me. And I just didn't like the way the technicals were unraveling the way I look at them. So I had it 3 or 4 days, and it just wasn't doing what I thought it should do. So, um, uh, yeah, I think I'm getting better all the time at managing the downside. So I'm happy about that. And you're
Good.
always improving. It's never, um, when I was younger, I had a lot of great trades, and then I'd have a few miserable, horrible trades, and that's no way to do it. Yeah.
Well, you have to be open, Joe, to learning. And because I mean, I have a 13-year-old and a 15-year-old, two girls, and I learn something from them every single day, and it's incredible. And I'm like, oh my gosh, I can't believe
That's
you
because
just
I don't think you know anything, Michael.
Oh, well,
Mm.
all right. Well, hey, you're only trading about 4 to 6 times a month. So you don't trade that often, but you're trading just enough to catch opportunity in the market. I
Yeah,
mean,
it goes in spurts, bud. Yeah, like
I,
we didn't trade for a while, and in March, because I do a daily video every day, and I illustrated the reasons why I'm not trading up here. I'm just not. So for all of March, pretty much, we sat out, and since then, I've done 5 trades, I think, in April.
okay.
So yeah, but again, patience pays, and you just follow your methodology, and don't let anybody. It used to bother me when somebody would say, "Well, we haven't done any trades for 3 weeks. What's going on?" And now that doesn't bother me because you're not here to make trades. You're here to try to make money, right? And they're oftentimes at odds with each other. If you want action on every day, then you're in the wrong place. I'm not
You
here
know
to
what?
have action.
Well,
Yeah.
you know what I've noticed too, Joe? A lot of we've gotten a lot of individuals who are somewhat new to trading, like trading less than a year in the market. And
Right.
for some reason, and they come in waves, like when they contact us, right, throughout the year. And we've been in business like, for a while, so since 2006. So I've seen a lot of different types of investors come through my door
Right.
and become a client. But lately, over the last year, we've seen all these new investors that have this mentality of wanting more trades. I mean, we literally had somebody the other day,
Yeah.
a client that signed up with one of our programs and was just, hey, I want 20 trades a month. I want more activity.
Yeah.
And we,
Yeah.
as much as we've told them, like, hey, listen, more trading doesn't necessarily mean
Right.
more
Right.
profit. We
Right.
actually, I did an evaluation on a trader about a year ago that came across my desk, and the results looked pretty decent. But when I looked at how many trades they were doing, I mean, it was something like 30 trades a month, like a lot of intraday stuff. And by the time you
Right.
calculate all the transaction fees that somebody's going to make, I mean, really, you ended
Right.
up with maybe like a 2% return, if that. It
Yeah.
was incredible.
Yeah.
So it was somebody
Yeah.
that we actually didn't take on as an individual trader to represent because it was too much over trading. So
Right.
um,
Um, I might touch on this a bit in the webinar, but trading is the antithesis or the opposite of everything you've done in your regular life to be successful. So, I mean, I can understand that attitude because normally if you're on piecework making, steel widgets, then the harder you work, the more widgets you make, the more you get paid. But that isn't like that in trading at all. The market's just waiting for you to do something stupid and make too many trades so it can part you from your money. So,
oh
like
yeah,
again, patience pays.
yeah.
Patience pays, and if you see the very most successful traders, they're they're the least active. You know,
Yeah,
like
it's
even
true.
so I'm also trading futures during the day, right? But I'll only trade for a little bit in the morning. But 1, 2, 3 trades is all I'll do sometimes, or not sometimes, almost all the time. Um, and then I'm talking about trades that are lasting, a minute or something like that. But no, you can't sit here and make 100 trades a day. At least I can't. Um, and I think that's generally true that the number of trades is inversely proportional to your success.
Hmm.
Very, very largely generally true.
Hmm. Well, that actually is a good segue into we're going to talk about your scoop indicator, right? You want to touch on that today, which was developed by you. And you had sent me a couple of charts that you wanted me to pop up here for the audience. And I'm going to let you pretty much take the helm here. You just let me know where to point. But
Okay.
I'll let you just go ahead and just explain what these charts look like for your scoop indicator.
Okay. All right. Well, in the very, 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 very basic, um, if you just glance at this, you're going to see you're largely blue or you're largely red coming down here or you're largely blue again. So on a macro view, you want to trade long when you're blue and red when you're short. So that's kind of the macro view of that. Okay. So uh, that's not the drill down view. How do I get in? Okay, I know that it's blue, so I want to be long. Um, that comes next, but that's the macro view of blue is long and red is short. And hopefully you can see, if you're not colorblind, you can see we're pretty much blue up here and pretty much red down here, and then we start to get blue again. So,
Do you want me to
okay,
go to the next
that's,
chart?
yeah, go to the next slide. Yep.
Okay.
Okay, so, and this is the scoop indicator that Michael had talked about. If you follow at the bottom, the indicator there, there's a blue histogram, which is the solid blue or almost solid blue. Um, that's the histogram. And as long as it's above zero, then you want to be trading long. Okay. Now the oscillator, which is the red line, and you can see
That's this line
there's
here.
little arrows under the bottom of some of those. Yeah, where Michael's highlighted there. Those are the occurrences where the histogram, the blue one, is above 0, and the oscillator, the red line, has come down and starts to turn up. Okay, so again, histogram blue above 0, oscillator comes down below 0, starts to turn up. So those are the buy signals. And if you go over to where it was red, where the little red arrows are on top, Michael, there, those are the sell signals. Okay, so it's basically as simple as that. It will keep you out of the chop, because during chop, what will happen is you won't get very many signals, because the blue one will just chop back and forth. All right, so those are the two components. I need to know my big macro picture, and then we drill down to the scoop, and the next chart puts them together and shows you where the signals are. Okay, so you can now see within the blue where the scoop indicator has shown you buy signals. The arrows are still there. Okay, and so that's very largely what I follow. And over on the just more right of the midpoint, the arrows for sell that Michael's are highlighting there. So that's the approach. It's approach that for me is, well, I've actually the very best systems that I've ever tested are buy dips in the trend, sell rips in the rally. So with the larger trend. So that's basically what the system does. It buys retracements within a larger trend. So that's my philosophy, and that's how I work. And I guess I'll show you a couple of examples that we've done in real time here recently.
And then this is your scoop indicator you are following diligently, and that's why you've had, what, 5 losses in the last 40 trades or so, probably?
Well, that's probably, yeah, it's because it is pretty good for pinpointing good entry points, but you still need to manage after that and so forth. So yeah.
Yeah. All right. I mean, it's pretty self-explanatory when you're looking at the charts, and
yeah, I think it's a pretty visually
fantastic.
compelling case for that. That's a good way to trade. Yeah.
Okay. Now, I know that the audience, one of the biggest reasons that everybody had signed up today is they want to know why neuroscience is so important in trading. And I know that you teach it, you practice it, and it's something that you want to share with the audience today. So let's dive into this, if that's okay with you, Joe. And I can actually then you can start sharing your screen, and then I can make you the presenter. Are you ready?
I am ready.
Okay, so I'm going to go ahead and change the presenter here, and I'm going to allow you access, and then you should have access now, and you can start sharing your screen.
Okay.
Perfect.
Okay. Got to get our pictures out of the way here. Okay. All right, yeah. Neuroscience and trading is important. Well, for one of the reasons that Michael and I kind of accidentally highlighted, and that's because trading is the exact antithesis of everything that makes you successful in the rest of your life. You need different characteristics. So that's one reason. The other thing that this seminar, I hope, or webinar is going to be somewhat interesting is because most of the stuff is applicable, and in fact, largely comes from its applicability to other areas of life and how our brain works. So we're very fortunate living in this time, because we've learned so much about how our brain actually works from a scientific basis. So obviously, I'm not a scientist and don't pretend to be, but the great thing about that is the hard lifting, the heavy lifting has been done by the scientists, and the crazy simple thing is that as much heavy science and things as I don't understand, the findings are very simple and very easy to understand, which is really a cool thing. For instance, our belief systems now we now know are like actual knots of cells, and they don't want to come apart. They're knotted together. All right, so that's what a belief is. It's an actual physical knotting of cells that doesn't want to come apart, which I thought was a pretty cool thing. And there are actually, I think the number is 300 billion chemical reactions in your brain every 1 second. So there's a lot going on up there. Now, does the brain, and this is perfectly applicable to trading, but as I'll point out in a second, applicable to all things in life, does the brain always act in our own self-interest? And the answer is no, it doesn't. And there's a couple of reasons for that. One is some parts of the brain, well, there are many parts of the brain, and it's not a homogeneous, it's not homogeneous, and it's not optimal. The brain's major function is survival, not optimization. Okay, so that's why the brain resists change, because it sees change as unknown, and the unknown is unsafe. And it sees dealing with the crap you already know how to deal with, even though it's not fantastic, at least it knows how to deal with it. And that's why change for all of us is hard. Okay, now your brain is like a PVR. We spend the first 7 years of our life putting things in, and the rest of our life, spitting them out. So it's like, when you get your Windows computer home, you have to install all the programs before it's any good, and that's similar for the brain. As I said, why is change difficult? I just explained that. It doesn't. Well, first of all, those actual physical cells don't want to come apart, and secondly, it sees change as the unknown, which is unsafe. Hopefully, I can get this next slide going here. Okay. So how do we combat that? Well, we have to understand that our subconscious runs 95% of our reactions, our habits, and our beliefs. Okay, they all are programmed at a subconscious level. And 90 to 95% of everything we do during the day, all our reactions and habits, come from our subconscious. Our cerebral cortex does not process them. They just happen. I'm sure that sometimes you've gotten in the car on a Saturday and you start driving to work, even though you're not going to work because it's Saturday. Well, your subconscious is taken over. Or you've someplace got in a car and driven somewhere and you don't remember how you got there, really, because you did it all subconsciously. And that's how our brain works. And one of the most important things to know about your subconscious is that it has a pinhole reality. And by that, I mean that your subconscious only knows the things that have happened to you. Okay, that's really important to understand that. Your subconscious only knows the things that have happened to you. Your cerebral cortex can observe other things, it can read other things, it can be more generally aware of other things, but it's only processing about 5% of what you do in the day. Okay? Your subconscious is processing 95%, and it only has that pinhole reality, and everything that it believes and it knows is based on things that have happened solely to you, not to your neighbor, or not that your cerebral cortex can figure, oh, well, obviously there's these nuances and stuff in the situation. Your subconscious doesn't have those nuances. So we can say that, oh, money management discipline is really important, but they're just platitudes. Until you know how your brain works and what your obstacles are, and where the conflict within you is coming when you're trading, then you can't fix it. And we all have conflict in trading. There isn't anyone who sat down and traded and done investing that hasn't been subjected to conflict, right? And there's the book that was written, I think, in the 80s by Jack Swigert. I think there was a follow-up, Market Wizards, it was called, and it was just biographies of people who traded and telling their stories. And they're all great traders, and you can see they all had conflict and they all had things that they had to overcome. Now, neuroscience, oops, oh, darn it all.
Hey, Joe, can I add something in?
Yep.
I mean, it's so true too. Well, they do say what, 30 times you have to do something 30 times for it to be stick in your brain. You got to have that repetition. So it's like,
well, I think it's 10,000 actually, but anyway.
Is it? Okay. It's
Yeah,
something like that. 'Cause I know when the whole seatbelt law came into effect, right? And you had to put your seatbelt on, and it was this whole thing of repetition to get your seatbelt on and remember to put it on. I mean, I don't know. I was driving the other day. I was on my way, and it was on the weekend because you mentioned Saturday, and
yeah.
I was headed over to the grocery store to pick up some stuff at Sprouts, and you know where I ended up? I ended up at the
At
office.
work.
I ended
Yeah,
up at work. I was like,
yeah,
what the heck am I doing pulling up to my office when I'm supposed to be at
yeah.
the grocery store picking up some milk?
Absolutely. Yeah.
It was pretty
Perfect
crazy.
example. Yeah.
Yeah. So,
Okay. Well, just to tell you how dumb my brain is, I've spelled neuroscience wrong on my own slides here. Okay. So there you go.
oh, but you caught it, and that's important that you actually caught
That's
it.
right. There you go. Yeah. Okay. So we've already been through that. Just ignore the headline. Um, so what change is called in the brain is neuroplasticity, and it's not that neuroplasticity is not as complicated as it sounds. You can reroute what your brain does, and it can start instead of being in survival mode, you can start to make it in optimal mode. All right. One of my favorite analogies of how your brain works and how it's in conflict with you sometimes is in a nursery school. Um, like I said, the brain's not homogeneous organ. It's got lots of different divisions, and just like the kids in the nursery school, and they're all doing different things. And oftentimes, you're going to get one kid who's going to stand in his chair and start screaming that he wants ice cream before playtime. And if you've never been in a nursery school, you know that these kind of things, like they're true, they happen, or they happen in your house with your little kids, right? Um, but the teacher can help that child. She can comfort that child. She can explain or redirect or whatever she wants to do. But what she can't do was give the child ice cream before playtime. Okay? She can't do that because she can't let that child run the nursery school, right? That's her job. So in effect, that's when our brain wants us to chase the market. It wants us to triple down on our position. It wants us to move our stop or take our stop out. Or it wants us to go all in. You know, that's the child wanting his ice cream um, before playtime because those things, as you know, we've all done them. We've all done them. I've pulled my stop. I've gotten fear of missing out, FOMO, and chase the market. Everybody has. We've all been through all this stuff, right? And they're the child that you can't let run the market. So that's some part of your subconscious that is afraid that you're going to fail, so you can't miss out, or afraid that if you don't get every opportunity, you're not perfect, and your parents, you lived in a house where perfection was really highly valued, or whatever. There's so many reasons why it can happen, but really it's not that important why it happens. It's only important that you're aware of it. Okay, that awareness is so important, and the, the way I like to explain that and the difference between your subconscious and your cerebral cortex is um, that we are not our thoughts. Okay, well, if we are not our thoughts, who are we? We are the observer of our thoughts. Okay? And if you can, and a lot of times, and we've all had days where you start to spiral, and not even in trading, but in life, and you start having, thoughts that really aren't serving you. Sometimes it's not always possible to get rid of those thoughts immediately, but what we can do is realize and tell ourselves that, um, I'm not my thoughts. Um, they may have to run their course and they may have to pass, but I'm not going to act on them. I'm not going to make any decisions on them. I'm just going to let them run their course because I'm not my thoughts. And to do that, you have to be the observer of your thoughts. And uh, another example of that of how if you let that subconscious or your beliefs that are subconscious or your habits that are subconscious or your reactions that are subconscious, if you let them run your life, I'll give you an analogy of what will happen. And every single person listening to that has seen it in other people, and probably other people have seen it in us. They're going down a path where you're looking at them and you're going, well, why are you doing that? Because this can only end one way. but of course they don't see it. They're operating on some different reaction or belief system or whatever, okay, that at the time they are unaware that the path that they are on is going to lead to complete disaster. So you got the Wile E. Coyote syndrome over and over and over again, okay? And I'm sure you've watched somebody else do it. I'm almost for sure somebody's watched you do it, okay? And that's why, because that we're acting based on reactions and belief systems that are in our subconscious. If our cerebral cortex can get in the way, and oftentimes it does, because it does keep us from, say, you know, um, punching someone in the mouth who you're mad at. Okay, your cerebral cortex has to intervene, because I'm sure we've all had the reaction that I want to punch this guy in the head, but you can't. So that reaction, that cerebral cortex has to intervene, and we can make it do that in our regular life and in our trading life. Okay. Okay. Now here, what have we got here? Okay. New connections are resisted. Yes. New connections are resisted, like I've already explained, because change is unknown. Unknown is dangerous. So why would we do that? So your brain wants to, because remember, it's a survival organ. It's a survival organ, not an optimizing organ. It wants to survive. So new connections are often resisted. Okay, but understanding this, at least in my opinion, and this is something I guess is one of my beliefs, once you understand that how your brain is functioning, you're 50% of the way. Okay, because now instead of sitting there and yelling, "Why am I so stupid? Why do I keep making the same trading mistakes over and over again? Why don't I pull that stop? I know I said I'd never do it again." Well, because there's something in your subconscious that's making you do that. But once you understand that it's really not you, okay, because you're not your thoughts, right? You're the observer of your thoughts. Once you understand it's really not you, you can separate yourself from that situation, and you can start to make those changes. Okay, like I often, sometimes when I'm driving in the car, I'll say things like over and over to myself out loud, okay, about what I'm going to do tomorrow's trading. Okay, don't get caught chasing a decline tomorrow. It's going to be fake. Or if I moved my stop, which I rarely will ever do, but let's say I did, I should tell myself in the car, if this is one of my problems, you can't move your stops. It always ends in disaster. You can't move your stops. It always ends in disaster. Blah blah blah. And I would say that to myself. So if you have a problem with something like that, you have to really talk to yourself and convince yourself. Now, one of the best ways is the bridge for the brain. And just let me check my notes here on this, because this is a really cool one. I want to get it right. Okay, so if you've got a pen, here's the bridge for the brain. When you're writing things down, and this is only one sentence, but here's what it says. Okay, let me just preface this while you get a pen and paper. Okay, if you want to write this down. You've all heard this the story about the shooting baskets, where there's three groups. The one group shoots baskets for a half an hour a day for a month. One group only practices shooting baskets in their head for half an hour a day for a month, and the third group doesn't do anything. So you come back a month later, the third group's just as horrible as they always were. The first group, which shot baskets every single day, is substantially better, and the group that only practiced in their head but didn't shoot any baskets is 80% as good and 80% better than the last group, and 80% as good as the first group. Okay, and they didn't touch the ball. Okay, so that shows you one of the ways that your subconscious can be programmed. Okay, so given that, here's the bridge that we're going to use. Okay, and I'm going to use stop losses as my example. Okay, it could be anything. It could be FOMO. It could be impulse trading. It could be whatever is your issues. This is how. And the point of that last basketball sentence was because the brain can't tell the difference between reality and what you imagine. Okay, your subconscious, again, experiences only what happened to you, and it can't tell the difference between what you are imagining happened to you and what actually happened to you. All right. So that's the premise of what I'm going to teach you here. Okay. So here we go. I used to have trouble with stop losses, and I wouldn't get out when I should. But now I know that I need to honor my stops immediately, no matter what. So here's the bridge. I mean, I'll read it again. The bridge part. I used to have trouble. I used to have trouble. Okay. So that's the start of the bridge, that you used to have trouble with stop losses, and I wouldn't get out when I should. But now I know, that's the second part of the bridge. Okay. I used to flips to in your subconscious. Now I know that I need to honor my stop loss immediately, no matter what. Okay. One more time. I used to have trouble with stop losses, and I wouldn't get out when I should, but now I know that I need to honor my stops immediately, no matter what. So the bridge is I used to, but now I know. Okay. And that is the best bridge for changing really anything in your life. Okay. Because you need to reprogram your subconscious. Okay. It helps, I think, a lot to understand that what your subconscious, that it, unless you intervene with your cerebral cortex, it will keep doing those things. It's not your fault. Okay. But you have to be, there's awareness, and then there's intervention, and eventually there's change. Okay. Uh, so that's how to fix those issues in that you're happening. That bridge is the number one thing. I also, like I said, I like repeating stuff out loud in the car when I'm driving. If there's something, if I know the market's going to be particularly tricky the next day, or I think it is, I'll say to myself, just be really aware that don't get sucked into a decline tomorrow, because it's probably going to be fake, something like that. So it's there, and I when it happens, I know. Okay, so that was really really I abbreviated um, synopsis of the seminar I usually give on neuroscience. So if you just give me 1 second here, I just want to I'm just going to go through my old notes here and see if there's anything else I want to talk about.
I mean, Joe, you could almost apply that, and I don't want to say almost, but you could apply that to not just trading, but every day,
Oh, for sure,
So,
100%. Yeah, and a lot of it comes from every day, and just applied to yeah, a lot of this stuff I didn't learn from market psychology. I learned it from other places. So yeah, yeah.
can you repeat that? Because I'm going to write it down and blast it to everybody that's up. Because we had somebody here, Carlos, had asked if we could write it down here and send it to them. I'm going to
Oh,
type it in. So,
the bridge.
yeah, the bridge.
Okay, okay. I used to have trouble. Okay, and the underlined parts are used to have. Okay,
Right.
that's the part you really need to emphasize. I used to have trouble with XXX.
With
Okay,
my,
with
uh,
XXX, whatever your problem is. Stop losses I wrote, but or issue in brackets or whatever. I used to have trouble with stop losses, and I wouldn't get out when I should. Okay. Now the second part of the bridge is, but now I know. So that's the second part to be underlined, but now I know. Okay. So it starts off, I used to have, and segues in to, but now I know. Okay. Now I know that I need to honor my stops immediately, no matter what. Okay. So it works with anything. It doesn't have to be applied to trading. It can be applied to something else. You know,
so I
you
used
know?
to have trouble with my trading stop losses. I
Right.
would not get out when I should, but now I know that I need to honor my stops immediately. Correct?
No matter what.
No matter what.
Right. Yep. And you could change it. Like I need to know when driving on the I-75 that I can't drive higher than 65 miles per hour, or I'm going to get a ticket. So now I know that, I set my cruise control to 65, whatever. It just, the bridge is I used to, goes to, but now I know. Because again, your subconscious doesn't, only knows what you tell it, right? It only knows what experiences it. So when it
Yeah.
says, it used to happen, but now I know this, so it goes, oh, okay, we know something new. We'll put that away.
But it's kind of like my kids when they say, I used to know that broccoli was horrible, but now I really know broccoli is horrible.
Yeah.
Oh, yeah.
Mm.
So, all right. Well, perfect. Well, thanks. We're coming up on the hour, and I know we still have a lot to cover. We got Joe. You have a trade set up you want to talk to everybody about.
Okay. Yeah.
We also want to finish up your target zone and go over some of the details there, so everybody has a full understanding of what your program's all about, as well as you want to talk about target zone and some of the trades that you've had recently to give people an understanding of how all of this that you're teaching, the neuroscience and your the way you handle your trades and your scoop indicator, how that all works and coincides with the program itself. So
Right.
yeah,
Okay.
what are you going to be showing first?
Well, here's a trade that we did recently for Key Point, and Key Point's just an option or a service that just only does puts and calls. I do a lot of the same things in Target Zone, and sometimes I'll do spreads. In this case, I only did puts and calls. I think in Target Zone, a couple of people missed a fill on this because it happened quick, but we did get filled on it for some clients. So you can see here exactly what I explained to you in this diagram here. The histogram being black, which is the black part, is above 0. The red line, the oscillator, if you follow my cursor, comes down and turns up. All right, so if you follow that my line straight up, where is it? It's buying this dip in this uptrend right here. So we bought Chevron at 156, and we got out today when the stock was about 162. Okay, and so we had it only 3 or 4 days in the option, so it was a nice trade there. So that's a real-time example of something we've done. I mentioned IBM. I'll show you that one. I mentioned IBM. I got in and I got out. Let me change my my timing here. So here was the setup that I had in IBM, and you can see the last time we had a setup was right back here. All right, and I have it here, but you know what? This is the longer-term chart, and when I went down to my daily chart or shorter term chart, it was just hanging along these lows too long for me, and so I decided to scratch the trade. And that's not to say that the damn thing may not go up. It could easily rocket now, but that's to say that that's the part of this that I can sort of show you this, or I can tell you about neuroscience, but the part of managing the trade where it just doesn't feel right and you go, if this thing has earnings and they're horrible, you're going to end up with at least a 50% loss probably. But if you get out now, you're going to break even. Would you rather be sitting on the sidelines with your money, or would you rather gamble that you're going to be able to, sit through earnings and it's going to be okay? So that's the part that I can't, teach you in a webinar. And that's the part where neuroscience kind of comes in, because you have to be able to say, okay, listen, I think this is the right thing to do. One of the things that helps, I didn't mention in the webinar, is to have a countdown if you're having trouble. 5, 4, 3, 2, 1, boom. 5, 4, 3, 2, 1, I'm going to get out of bed. 5, 4, 3, 2, 1, I'm going to pull the trigger because I know this is right. 5, 4, 3, 2, 1, this doesn't look right. Put your order in, just get out. Okay, the countdown helps you actually initiate if you're humming and hawing. Okay, puts your brain in action mode. So yeah, that's. But you can see the exact same setup that we use that I showed you in the example that Michael had. It's the exact same setup I used to get into to Chevron here.
That's awesome, Joe. Thank you for sharing.
Okay, yeah, the trade of the year. Okay, well, I'm going to give you two things. One, I'm going to tell you that at the end of April or the first day of May, somewhere in there, let's say May 1st plus or minus a day, I think we're going to have a low in the stock market, just based on some cycles that I watch. And Whether that low is going to be higher than the low we just made last week or lower, I can't say yet. But I do think there's going to be some sort of low made in the next, say, I guess that's a week and a half, right? A week and a half away, around that May 1st time. So that will be one of my trades, that maybe not the trade of the year, but I'm going to put that as my trade of the quarter, okay, for you guys. So watch that time frame for a possible low. The trade of the year I had was, and I have to go to a monthly chart because we're looking at, monthlies here. And we're very lucky because when I had the trade of the year, it was $58. It's Oxy Petroleum, by the way, and you can exactly see the setup. You got a clearly bullish histogram, and here's where the beginning of the year was. It's a monthly chart, so you can see 4 months back is January. That's where the low was, and that was my pick at $58 for trade of the year, and it's 67 and change right now, so it has moved up. Last year, just to show you that I'm consistent in my process here, last year my trade of the year was Microsoft, and it was right here. Okay, and again, you can see why. It did give me a little heat for a little bit here, but eventually it moved on up. So I give you my trade of the quarter, and my trade of the year is Occidental Petroleum, and I still think there's probably, in the big picture, room on the upside in Oxy. Would be one I'd be buying the dips on.
Okay. Thanks, Joe. I appreciate that. I'm sure everybody else appreciates that as well. So, okay, and I think that was about it on that side. I know we have a Q&A session, and we're going to finish up with target zone, correct? So I'm going to take back over as presenter, if that's okay with you.
Sure.
Okay. All right. So let me take back over. Perfect. Okay. And then what screen are you looking at? You should be looking at you should be looking at my Neuroscience and Trading. Is that correct?
Yeah. Yep. There we go. Yep.
Okay. Perfect. Okay. All right. Cool. Okay. So everybody. So perfect. Yeah. So we're over here, and we just finished that up. Thank you so much, Joe. But with Neuroscience of Trading and some of this other stuff, it is a subject that you do go over and teach during with your target zone options. You talk about it during all the videos and as well, correct, with that program?
Yeah, I try to do a video most nights of the week, just kind of saying what we did, why I did it, what I think is going to happen, in the short term. So yeah, I do a video every night, kind of keeping people, up to abreast of what we're doing.
Perfect.
Yeah, so that way,
it's very informative. And when clients actually are getting that video and listening to what's going on in the market and hearing you talk about where we're at, what trades we're on, what you're looking for, and why either A, we're having some trouble, or why we're sitting on the sidelines, it's very informative for them, because now they're not sitting on the sidelines going, hey, what the heck is Joe doing? They know what Joe's doing because they hear you every day, right?
Yeah, for sure. Yeah. I think it does help to keep everybody sort of, oh, I see why you did that, and even if it turns out to be wrong, they go, oh, well, the last time 4 times he did it, it turned out to be right. So,
well, it's very educational. A lot of it. A lot of people learn from that. So, so with the new memberships, just to give everybody an idea with Target Zone, you are getting access to Joe directly, right? They do have access to you. They're getting your email, phone. You have a Skype that you do Skype with your trading clients as well, and going over questions with them. They are getting the direct trade alerts. So if they want to, it's going to your email, and also for your cell phone, everybody that wants SMS. With Target Zone, it's pretty transparent because you're getting daily recaps of what's going on in the market, what's been opened, what's been closed, and what you're holding. Correct, Joe?
That's correct. Yep. I don't do those. So yeah, I don't do them, but there is support that does that.
Yeah, between you and your team, it gets out. So, and then you are providing the rules of the system on that side of it. So people, if they want to learn it, they do get access to your proprietary, I can't even talk today, proprietary indicator with the scoop indicator, your video commentary, We are doing the 1 hour sessions where you can go over the psychology of trading and the neuroscience. And for those of you out there that are curious, that maybe you're new to trading, you don't have a lot of time for trading, there are a few third-party brokers that are set up with Joe's system that do get the trade alerts, and they can execute trades for you per a letter of direction, LOD. That is a service that is there for you. We don't recommend specific brokers. That's your choice if you choose to do either self-trading, or if you want to do broker-assisted trading, that's up to you. But there are brokers out there that can help you. And then with us, we're here every step of the way, me and my team, as Joe's support system for customer service. And as a client of ours and a client of Joe's, we're going to be here through your whole entire journey. Okay. So what we are looking for in Joe, because we don't want Joe doesn't want to overwhelm himself with hundreds of people, so we do end up giving a special bonus for some subscribers that are very interested. They like what they see. They want to make changes to their current trading. They want to see success. They want to understand trading and be better at what they're doing. Why not follow somebody like Joe that's already mastered this? He's been doing this Joe, you've been doing this for over 30 years. You got great success. Over 40 trades, you've had about 5 losers. So that's pretty fantastic in my book. So if you want to sign up, if you are interested, we ask for these type of partnership opportunities. We want to have a meeting with you at least every quarter, monthly if you want to. We want you to send your brokerage statements in, so then we can track your success. And then we can use those for promotional purposes. We can also redact your personal information. And then Joe and I, we want a testimonial, right, Joe? I mean, you just got a testimonial from one of your clients, right? That was fantastic. I think her and her dad made like 60 grand or something like that on one of your trades.
Yeah, it was nice. Yeah.
It was. And she also said her and her dad weren't really, what was it that she said, that her and her dad weren't close before or something?
Well, it's they brought them together. They bonded over, I guess he was older and still liked the idea of the whole trading thing, but probably wasn't equipped for doing it all himself. So they got together and it gave them something to bond over.
Yeah. And they both made money while doing it. So that's incredible.
Yep.
Right?
Yep.
Yeah. So look at that.
That's
You're
a good bonding
bringing family together, and you're helping them make money at the same time, which is incredible.
Yep.
So.
Yep.
Oh, all right. So everybody, this is the bottom line. We're going to give you the price. Okay. Joe and I aren't going to hold anything back today. Typically, what we do is for these type of partnerships, when we open up the opportunity, our standard licensing for Joe's partnership opportunities are here. We usually offer 2 different choices for people that want either shorter term or longer term periods or licensing with Joe, where you get to trade with him, you get all his videos, basically Joe's doing all the heavy lifting, he's finding all the trading opportunity. And some people like to sign up for a 2-year term period because that gives them more time to hit their trading goals, learn the neuroscience, and see excitement with their trades and improve. And it gives them more time to hit their goals that they're trying to hit, whatever that is. I mean, we've had so many people come across our desk that say, hey, I want to retire in 3 to 5 years. So I really want to boost my retirement with learning how to trade and also seeing success in the market. So they sign up and start with a 2-year term. For today, what we want to offer, for those of you that are really serious about wanting to make some changes, we have a deal for you today, right, Joe? So we're talking about really helping individuals that are truly serious. You guys out there that are still on as far as an attendee, if you are serious and you want to take your trading to the next limit, we want to work with you. We want to work with serious clients, just like you are looking for a real successful trader. You're looking for somebody that you can get behind. And, if you like Joe, if you like what he talked about today, if you like the program that we're offering and what Joe's going to be teaching you, this is it. We're going to give you a 1-year lease, right? So that's part of the investment is right here. Is you're going to be investing in Joe $3,995 today. We're giving you a discount. We're going to give you 6 months of quantum alerts for free that just gives you added trades. So if people really aren't very happy about your 4 to 6 trades a month, they get a few extra trades with quantum. And what is quantum? Quantum's about, it trades about the same 4 to 6 times a month, Joe, roughly, I think.
Yeah. It's actually it is completely AI, so it's completely run not even by me. So
Okay. Yeah, it's just trade alerts at that point. But you get more opportunity. So that's going to be free for 6 months to help you really boost your trading. And that's the opportunity. So it's right here. It's 1 year to trade with Joe. You get everything that comes in the opportunity here. Every one of these points here, 8 of them. We're going to give you that for $3,995 today for 1 year. And then we're going to give you the 6 months trade alerts. Okay. And that's the bottom line. Now, I know that we still have some people on, and I do want to open up it's an hour and 12 minutes. So we're kind of going a little bit over here, Joe, but it's been exciting. I've had fun. But let's open up the discussion for some Q&A, because I know we may have some people. If you got some questions right now, everybody that's on the webinar, and we still have quite a few people on the webinar. If you want to ask some questions, right now is a great time. So please go ahead and post your questions in the question box there on your screen. And then Joe, I'll field them if that's okay with you, Joe. And
absolutely.
we'll see what people have. And Joe's here to answer any questions that you have, whether it's the neuroscience, it's the trading aspect of target zone. If it's one of the trades he just showed you, please post your questions here. I know that some people were asking if there's a recording. Yeah, there'll be a recording. Definitely. We'll send that out to you as soon as the GoToWebinar renders the recording. So some people in here are asking if in the beginning, would it be wise to start paper trading? If that's, if they're new to trading, start taking on trading.
Well, you know what? I'm going to say no, honestly. Like, if you're going to follow me, you don't need to paper trade it. Paper trading is when you're trying to learn on your own without any assistance, whatever. So, I think paper trading is good to start if that was your case. Or if you wanted to try to make separate trades on your own that you did paper trading, that would be fine. But if you're going to be a member of the service, then no, just use the service, I would say. Yeah.
Yeah. Okay. All right. I did have somebody here, his name was Mike, say nice hat. I appreciate that. I'm a hat guy. I love hats. I have a ton of hats. And, my wife gets upset every time we're out somewhere and we run across a really cool hat. She's like, oh, geez, not another hat again. I think I have probably about 40 different hats in my collection, but thank you, Mike. Anybody else as far as questions go? Here we go. We got Mike again says here, setting targets seems as difficult as stop losses. Any tips for giving up profits?
Yeah. Actually, when I do the bigger webinar, I do cover that. Basically, the market's always giving you information. Okay. And we have to understand what the market knows and what the market doesn't know. Okay. First of all, what the market doesn't know is what price you got in at. It doesn't know and it doesn't care. Okay. What does it know? Well, it knows that it made a recent low at this price, whatever, and it knows that it had a recent high at this price. It knows that kind of stuff. Or it knows that it's been up 5 days in a row and it's probably getting tired, at least short term. Okay. So one of the things I don't, and the other thing that's to consider here that I find is a big misnomer that people preach a lot is risk reward. Oh, you have to have 2 to 1. Well, boy. And they'll say, oh, if you're only 50% and you're 2 to 1, that means that you risk $1 to make 2. Do you know how hard that is, guys? To make $2 and only risk 1? If you 50% is a huge win rate. It's really hard to do that, to risk $1 and make 2. So remember this, and I'm going to get to your question in a minute. This is all preface to your question. The risk reward and probability are like a teeter-totter. Okay, risk reward is not more important than probability. Okay, if you put too much emphasis on one, you're going to get screwed on the other one. Okay, so there's a minimum risk reward that you have to have, and it may be, I'd say 0.8 to 1 at least to start, or 1 to 1 say. And you know, it's much easier to be 60 odd percent right and 1 to 1 than it is to be 50% right and 1 to 2 or something like that. In terms of moving stops and so forth, here's a strategy that you might want to consider. Again, if the markets, if you have a stop of 100 points and the market's got 80 points against you and it starts coming back your way, you know, don't keep your target at 150 points, right? The market's giving you information here that, you know, it came within 20 points of stopping you out. So if that's the case, I'll start to take some of my position off on this rally, maybe at a 20 or 30 point loss or a break even or however I want to divide it up. But I'm not looking for my initial target anymore. Okay, so that's one way to manage your trade. The other way is when it actually goes your way. Okay, if you have a 100-point stop and you can figure this out by observing your trades, you get 3 or 4 bars that close in your direction. Okay, don't move your stop to break even. That is a suicide move. Okay, cut your stop in half. So if you're at a 100-point stop, now you got a 50-point stop. And if you had a 1 to 1 risk reward ratio when you started out, now you've got a 2 to 1. Okay, moving your stop to break even will kill you. Okay, so don't set too ambitious of a target. Okay, adjust your targets based on the information the market's providing. Okay, remember this above all: the market doesn't know and it doesn't care where you got in. It does know how close it's been to your stop, where recent lows are, where recent highs are, how many bars in the last 10 or it's been up in a row or down in a row, so things like that, simple observations. Okay. Yeah, you know, I talked about this in March. You know, in the S&P, you know, the S&P had been up, I don't know, 20 of 22 weeks, and I said, guys, if you continue to try to be long the S&P, you're picking up panties in front of a steamroller. I'm not saying it's going to happen tomorrow, and I had to wait a whole month of March actually before it actually came to fruition. But you know, the month of March was a choppy sideways nightmare, and then we've had the recent correction. So, but that was a simple observation on the information the market's giving me. It's not sustainable. 20 out of 22 weeks up is not sustainable. And if you try to continue to buy long into that scenario, you know, you're going to get hit because there are cheaper prices coming. It's for sure there are. So I hope I gave you a lot of information in that question, a lot actually. So I hope that I answered it amongst them. If not, follow up. If not, follow up.
Yeah, Mike, was that, hopefully Mike, that was good. He said thanks. So yeah, I think that hit right on it. Now we do have a lot of other questions, but we're like way over the hour mark, and I don't want to take up too much of your time, Joe. I know you got,
well, if we have time,
I keep seeing your
listen,
left eye.
If we have time, go for them.
Okay. But I think we need to wrap it up though, because I think that's about it on, we already went over your hot trade of 2024. We did talk about that. So thank you very much. And then for those of you that need our contact info here, just take a screenshot of this, give us a call. Okay. Go ahead.
Can I just interject quickly, Michael?
Yeah.
Just let me interject quickly. People who have questions, email them to FFR. They'll send them to me. I'll answer them.
Perfect. Exactly. Yeah. If you guys have any questions, you can email us right here, support@ffrtrading.com. For those of you that are serious, if you're part of that 3, we would love to work with you. We'd love to help you out this year and going into next year. But yes, please give us a call right here, 737-292-4425. Give us a call right away, and somebody will be here. I have 15 people on my team. I got a couple of administrators. They'll probably be answering the phone. You'll probably listen. Alicia will probably pick up today. I have Laura on vacation, but you'll speak to one of my team members if you have other questions. I have a lot of great people on my staff. Everybody trades. Everybody's very knowledgeable. Joe, we just had a meeting with you, last week, Joe, and my team, was able to answer or ask you some pointed trading questions to get them more knowledgeable about your program, and so we can properly educate individuals who are looking for help. So I appreciate you, Joe. Thank you very much for coming on the meeting today in the webinar and giving us some insights to your success. I appreciate
My
you
pleasure.
doing that. Yeah. It's always
Thank you
great
for having
working
me.
with you.
Thanks,
So,
buddy.
yeah. All right, everybody. Well, thank you for showing up today. We'll get the recording out to everybody. Like I said, if you need some help, pick up the phone, give us a call, and we'll answer any other questions that you have. And we'll get you signed up if you are very serious about changing some things on your side. All right. So thanks, Joe. And then I'll follow up with you later this week, Joe. Thank you so much. And thank you, everybody. So happy trading out there. Be safe in the market. Listen to Joe. Practice some of that neuroscience stuff that you discussed today. And yeah, just don't be risky out there. Don't be a gunslinger, everybody. Okay, patience pays, right?
Patience
So,
pays.
patience pays. All right, happy trading, everybody. Thank you very much.
Okay, thanks, guys.
All right, bye-bye.